And in the days since headlines, Zeda announced its annual results, citing sector pressures stemming from global tariffs, changing supply chains and structural shifts. Now, the mobility solutions provider says operators had to adjust their strategies to offset the impact of these pressures. Zeda CEO Ramasela Ganda brought us full insight of that performance.
Very tough, but really structural change in the sector, and an environment that required us to really change and pivot to the right direction. And that's exactly what really characterized this year. A year that needed agility.
Yes.
Because when you look at the period we've been in with tariffs, with donor funding being cut in countries like Lesotho, it has been really testing. But also new vehicle coming in, from the Asian market, and not only Chinese, by the way, but an Asian market, and really competitive. So it really required us to pivot and really be agile. More importantly, be a proactive, understanding the market better so that we can yield the result. So it was really a very mixed bag of challenging year.
Yeah, and let's talk about that pivot and how you applied agility. Used car revenue down 4.1%. As you mentioned, the structural shifts because of the presence of Chinese as well as Indian vehicles in the market. How are you responding to that, the competition at play, and also not necessarily sacrificing your margins at the same time?
One of the critical things that I'm really grateful that we did very early on, because we're the biggest buyer of new vehicle, we were able to pick up the price trend early on. And in that way, it helped us to put a pause on deflating, into the used car market, and really saying, a 1-year-old car that for many years we used to pride ourselves on, that we've got a 1-year-old car that we sell, was now competing with brand new cars, because now you've got affordable brand that when you throw it in the used car market, you're going to really lose a lot of margins. And in that space, we then moved into a point of delay disposal. And really that's what happened, because our volume went down because of the delayed disposal. But what really was rewarding at the end of the year was, even with that delayed disposal, when we deflated, it was at the right time, and we really gained great margin out of it.
Interesting shifts playing out in that used car segment, Ramasela. I want to now touch on a segment that's been powering through the leasing segment, especially the heavy commercial vehicles, driving growth on that front. Does this increase in HCV leasing point to improving business sentiment?
Look, I think the part that we really like about heavy commercial, more than that it's a commodity-based business, it really gives us the diversification of our fleet. We've always been a light commercial vehicle and passenger vehicle when it comes to that. Now we've got more heavy commercial, but importantly, we also don't deal with a lot of specialized. So these are really just generic that are used for logistic purposes. So it really is a good business that help diversify the offering. But more than that, as you have seen today, that it's not just diversifying the operating options from a vehicle make, but it also from a financing point of view, because that's what we do in leasing. And what we've done in the year, we've issued products that behave like we are in a dealership space. And that has been the agility and the flexibility of our operating model, that we can take opportunities of changing in market environment and serve the customer, for what they require, because this is really driven by the cash flow of the customer. And we met the customer at their requirement, and we still delivered sustainable returns.
And I know in that segment there is a rent to buy option, and I just wanted to ask you about the uptick on that front, right? Because you are offering customers what works with their cash flow, what works with their balance sheet.
Again, that's exactly what we've done in most of them. Our leasing has got what we call a nominated residual value, which is really a commitment that say, working with me on my cash flow for the duration, be it 5 years, be it 9 years, because some of them are trailers, some of them are trucks, and looking at the life of it, what they are committing to is to actually have access of this at the end of their lives. So that has been a way of us doing an operating lease with nominated residual values.
And quickly, just before we wrap up the conversation around the HCV segment, You touched on commodities and that your biggest customers are, businesses driven by commodities, right? And I wanted to ask you, what are you seeing when it comes to the agri sector in particular that has been hit by those tariffs?
Look, it was tough for many of them. What has been good for us is that some of them had the diversification of both heavy commercial and light commercial. And to a large extent, we're able to help them along moving some of their vehicles in other sector. Agriculture has been one of the hard-hit one with the tariff, but we have started to see great improvement. And we also had a lot of fleet operators that didn't understand the market that really burned a lot during this period. But the big providers that we continue to provide the service to have really stood the test of time. So tough market for them, but recovery looking good.
All right, lastly, what have you been seeing when it comes to Mozambique? I know the last time we spoke, volumes were quite subsided. Not much trading was taking place on the back of the political instability and unrest on that front. Has that improved? What are you seeing?
Look, very positive outlook, and what we are sitting with now, especially with two major projects that have now come back, which is really the drive of the economy in Mozambique and tourism as well. The opening of new site, which is just going to be about tourism. So Mozambique will be a place to be watched in the next few years. So we're very optimistic and really excited to see what is happening in Mozambique. I think very soon this is a country that will get back to our growth trajectory that we've planned for them. So I'm really looking forward to from both commercial and tourism, that Mozambique will be a good country to go and visit.
All right, Ramasela, let's leave it there. Thanks so much for your time and taking us through the year that was for Zeda. That was Ramasela Ganda, CEO of Zeda.